this is Jim Jubeck for Jubeck Asset Management video on YouTube for Wednesday, May 7th. We're just coming off a great week here of wonderful weather and lots of holidays in Italy, which is where I am now. May 1st is a real holiday. Things close. April 25th is, of course, the birthday of Venice, as well as celebrates the martyrdom of St. Mark, the patron saint of Venice. Venice goes back to 421 AD, in case you want to know. You can actually get T-shirts here that say Venezia established 421. So makes me long for the days when I was in New York and nothing was older than 200 years. Anyway, so today's topic is going to be about volatility and speculation and the hidden volatility in this market. But first, if you like this video when it's over, or even now, subscribe to my YouTube channel. That way you get notification when we do our next one. I'm shooting for 3 a week, but I'm not making it. It's just too, well, beautiful here in Venice. And so if you want to subscribe, it's free. Subscribe that you get a notification when we do our next one. You can also get more of my free stuff on JubeckPicks.com, which has 1 or 2 picks a day, 3 portfolios, and that's free. If you want to subscribe, you can go to my JubeckAM.com site. That's got 6 portfolios. The 3 on Jubeck Picks, which is 12 to 18 months, 5 years, and dividends, plus an ETF portfolio, a really volatile volatility portfolio where we're doing some options trades lately, and a really long-term portfolio for people who've got 20-year time horizons. And last, I moved to Venice in September of 2023. Took 4 months off to go to Sicily last summer, but now I'm back. If you want to follow my adventures, we have a Substack, which is free. We being my wife and I. It's free, so go to Substack. It's called We Moved to Italy, and you can follow our adventures. I just posted today on the joys of buying vegetables and fruit at the big Venetian Rialto market. So if you want lots of photos of avocados and asparagus, subscribe. You can find links to all those down below. Today's topic, just to give it a headline, is hidden volatility makes this market dangerous. And on the surface, at least, we're on the 2nd, which was last Friday, we came all the way back from the huge, almost bear market drop in the S&P after the April 2nd tariff announcements. So we're basically back to break even on that volatility. So you want to say, oh, volatility's over. Well, I would like to tell you, nah, not a chance. Volatility is just hidden. It's really there. And if you want a sense of volatility, take a look at some of these numbers. So the Atlanta Fed does a forecast of future GDP growth rates on a thing called GDP Now. It's free. You can go to that site. On 30th of April, it was forecasting a 2.4% growth rate for second quarter GDP. That's decent, pretty strong, considering how mature this economy is. Okay, that was the forecast on April 30th. The forecast on March 1st was 1.1% growth. Now, I don't know which of these is right, 2.4 or 1.1% for the second quarter, but I would note that the size of this gap between 2.4 and 1.1 is huge, and that's not reflected in the market at all. Or if you want another sign of hidden volatility, you can go to the CME FedWatch site. That's the Chicago Mercantile Exchange that tracks sentiment on when the Fed is going to move on rates by looking at the price of the futures market. So it's really for the next month or two. So about a week ago, it was saying that the odds of the Fed cutting on May 7th, which is when the next meeting is, that's today, were about 93%, no odds of no cut. That's moved up to 97% as of Friday. So from 93 to 97, pretty clear, I think, that there's not going to be a cut on May 7th. Okay, so that one's not really weird. So earlier, again, about a week ago, the odds of a cut at the June 18th meeting, which is the next one after the May 7th meeting, were up to 62%. Not convincing, but clear sentiment. Well, a week later, the odds are down to 30%. Huge shift from 65% cut to 70% no cut. Huge volatility move there. So go out another meeting to July 31st. And a week ago, the odds of a cut were about 94%. Today, the odds of a cut are 75%. I don't know. My sense is that this is moving to push things out to September. There is no August meeting. So if they don't cut on the 30th of July until September, my sense is from listening to people talk on Wall Street, the strategists, we're starting to see some sentiment shift toward September. The reason for that, I think, are pretty good. Basically saying, hey, the Fed really does need to see more data about what tariffs are going to do to this economy and what's happening in the job market. So it makes sense rather than to rush into do a cut in July when they really can't then do anything for all of August except go out to have their usual meeting in the shadow of the Tetons at Jackson Hole. So it makes sense to wait until September. So that's what we're starting to see market. And if so, then this whole big rally recovery from the April 2nd lows starts to look a little speculative, a little shaky, because there are a couple things that are behind that rally. One is a belief that the Fed is going to cut sooner rather than later, and it's going to cut 3 or more times in 2025. If the first cut is not until September, that pretty much guarantees that the most you can get is 3 cuts because there is no November meeting. So September, October, December would pretty aggressive cut if the economy looks like it's tanking. That's what the Fed will do. If it's not looking like it's tanking, and it hasn't looked like it's tanking recently, you probably won't get that kind of aggressive move. And the other thing is that there's the assumption that we're going to see a lot of trade deals announced by the White House that would then make the July 8th deadline for that Trump suspended the tariffs on his new schedule from going into effect until July 8th. Thought is that there'll be a lot of announcements in the next month and that tariffs will go away as an issue. Well, I think 2 things. One is I don't expect most of those announcements to be real. There will be announcements of an agreement. An agreement is not a deal. An agreement is basically a framework to continue talking. Trade talks are very, very complicated. They take a long time to play out. They're not done in a month or a week. So anything that's announced now is going to be more along the lines of, we hope to sign a real agreement soon, but meanwhile, we're telling you we're talking. And right now, the 2 big trading partners, which are China and Europe, are not engaged in real talks at all. So there's zero chance of a real trade agreement coming out of those two trade blocs countries by the July 8th deadline or even later in the summer. So if the rally is predicated on there being a lot of movement on tariffs to lower them back to something like resembling normal, and even the 10% is not normal, U.S. tariff trade-weighted tariff level was about 2 to 3% before all of this mishigas. So I think those 2 things about the market make this a very speculative market, make the rally look a little premature. And certainly the hidden volatility suggests that there's more risk here than maybe people are thinking right now. So if you like this video, please give it a thumbs up on YouTube. Subscribe to my YouTube channel. It's free. You get notification when we do our next one. You can get more of my free stuff on my jubackpicks.com site that's got 3 portfolios, 12 to 18 month, 5-year, and dividends, as well as 1 or 2 posts a day. You can subscribe to my jubackam.com site. That's got usually 3 to 4 posts a day, 6 portfolios. So those 3 plus an ETF portfolio, a volatility portfolio where we're doing some options trades right now, and a really long-term 10 to 20-year portfolio. And then, of course, I moved to Italy in September of 2023, which is where this is coming. Hi. Hi from Italy, which is where this is coming from now. I'm in Venice. And I'm running, my wife and I have started a Substack called We Moved to Italy. Catchy, original. Where it follows our adventures, and that's free. Just Substack. Find We Moved to Italy. The most recent installment, which just went up a few days ago, is about the joys of shopping for vegetables at the big Rialto produce market here in Venice. So thanks very much for watching. Ciao.